Hey guys, welcome to this video this morning. I've got in for the London session. I'm probably going to do a stream shortly. Don't forget to get my free training underneath. It'll help a lot. The UK stock market is really interesting. You've just had your inflation figures this morning. Inflation's way down. Rishi Sunak is raving about how great he is again. And you're seeing a good push up in the value of the FTSE. Now, if you follow me, and I'll put the video underneath, because I called it long down here. Okay, why did I call it long? Well, it's because I called it long there. Why did I call it long there? Well, it's because I called it long there. Why did I call it long there? And I think you get the picture. Markets repeat, history repeats itself in the market, and it's not a cliche way of putting things. It's just the fact that if people have bought somewhere, that is clearly a price that they prefer to the long side. That's a fact. That is just how things go. That's how markets work. Prices get low to a point where they were before, and then they rise to the upside. Now, what was really interesting and what threw a lot of people off with this was these candle wicks here, but you had a similar thing there and there. Okay, so you pulled up to the upside. People thought, okay, that's enough, but it wasn't. As you can see now, you're coming straight up. And really what's happening at this point is you're falling in line with exactly what I said. Like I said, I'll put the video underneath here because I explained this before it has occurred perfectly. Okay, it's a great example of key price action levels and the repetition of markets. All right, and you can see that here. So you had one long zone, two long zones, three long zones, and it's just not a coincidence. The reason why this is happening is because the value of the FTSE is preferred to the long side by people who want a good deal on their stock index investment, the long-term investors. And they saw that good deal at 7250 and they went long. I went long, many of my members went long. And it will be the case that until you start to get to key resistance up here, you're already at some minor resistance right now, so you could pull some gains off if you'd like. But ultimately, if you look at the trajectory to the upside, in fact, I'll draw it with red arrows, conversely to the green ones I've drawn. If you look at these, you can see clearly, okay, you can see clearly what's going on. It's simple, all right? You've just got a sideways channel, and when the price comes up to this point where I've drawn these red arrows, guess what? Instead of people or investors in the FTSE100 saying, wow, you know what? That was a great long price. Guess what they're going to do? They're going to go, wow, that's a high price. I'd love to kill off the 400 points of gains per contract. You can see 7250 to 7650. And I'm going to get short because I've seen people get short various times before, and they all do the same thing. They liquidate their orders. The larger money in the market makes all the money. The people who are buying late don't make the money. And then you find the market starts to turn and fall. So a little bump around the middle is very common within sideways channels. I've mentioned this many times. You get this. It does happen, but it's okay to take some money off the table there or lock in gains. That's fine to do because you may find that this sustains itself. I would say the market sentiment with inflation coming down is very positive now for the the UK stock index and US stock indexes with the inflation in the US yesterday. And it's just because people are saying, you know what, companies are going to make more money, people are going to spend more money, the economy is going to grow, therefore the companies within the stock index are going to grow, and it's going to bring the whole value of the stock index up as a whole. That is why lower inflation brings stock indexes up. That's why after today's readings by the Bank of England, you've come up. You've also got very bullish words from Chancellor Hunt, Jeremy Hunt, the UK Chancellor, Rishi Sunak as well, giving all the positive market sentiment. That is bringing things like this up. You've noticed a drop in the pound today, and it's just because of, it's slashing the chance of a further rate hike, similar to what you saw in the US yesterday when the dollar started to lose value. People don't want to save it as much because they're not going to get as much from their savings. So in the near term, I wouldn't be shocked if you bounce away from here. I'm not holding incredible weight on it, and I think you'll probably get nearer your 200 moving average ultimately. But don't be afraid to lock in profit at this point. Well done if you bought there and bought there. But just get in your brain, and like I said, I'll tag my post underneath. The markets repeat, not because of chance and just randomness. It is simply because people see levels where they've bought, and then they say, okay, well, that was a good price, let's do it again. And you get the same thing to the upside. That is what forms these sideways movements long term. That's what really makes a good deal for most people. Okay. So if you pull back to 7482 or something like that, you may find it continues to the upside. Minor rejection here is just coming because if you put your higher time frames up, there's minor resistance about this point and various weekly resistance, but you can see the key resistance comes higher. So thanks for watching, guys. Don't forget to like, share, comment, subscribe while you're watching this. Get my free training underneath, and I'll see you in the next video. See you there.